Hello everyone, so this is the first video on Unit 3 for VCE Economics. For this video, I want to give you a brief introduction of the course. So what the course is covering, what knowledge you should know, and hopefully I hope you find the content covered in VCE Economics interesting. So let's get started. So for Unit 3, area of study 1. So this is the first area of study you would encounter when you were studying the VCE Economic Unit 3 and 4. So the first part of the topic is concerned with the topic of microeconomics. So I think this is best described by how we make decisions individually. So I think the thing that separates microeconomics and macroeconomics is that in microeconomics, we look at individual agents, individual people, individual consumer, and to see how they will react to different things. So this is what we are trying to find out in microeconomics. Whereas in macroeconomics, it's more of how government policies, how the big economic indicators like unemployment rate, inflation, GDP growth affects our daily life. So microeconomics, I think, is a perspective from individual, whereas macroeconomics is from a societal perspective. So the first thing you need to you will encounter is a market. There are so many types of markets: property market, share market, market of food, so many hundreds and thousands of different markets in the economy. Also, we have labor markets, which is a relatively special type of market, because if we think about individual consumers, what we will usually encounter is we are the buyer and then the firms, companies are the seller. But in the labor market, it's the other way around. We are the supplier of labor, so we represent the supply curve, and the demand curve is given by firms. So it's kind of special in this case. Also, it has something to do with humans. So the price is minimum, it's wage. So can have different consequences when we are looking at this very special type of market. So why do we study markets? Well, I think one of the biggest reasons is we want to look at how resources is allocated in the economy. The three fundamental economic questions. So it's what to produce, how much to produce, for whom to produce. That's the three basic questions. And there are different ways to answer this question. So in a planned socialist economy, this is determined by the government. In a free market economy, this is determined by the markets. So essentially, the role of market is to answer these three questions. And that's why we want to study them. And another question you may have is, why do we need to answer those questions in the first place? Maybe we can produce everything we want. Maybe we can produce as much as possible. So this leads nicely to a concept called resource. resource constraints. And I think in the in your economic textbook, maybe sometimes called limited resources, unlimited needs. Because our resources are limited, because we have so many people on the planet, because we have so many different needs and so many different wants, not everyone's want can be satisfied. And because of this resource limitation, only those who are most willing to pay, those who value this product most highly, can consume this type of product or services. So that's how we make this choice of what to produce, how much to produce, for whom to produce, based on very limited resources that we use market to find people who are most willing to pay, and the resources would be directed to them. Obviously, this can lead to some equity concerns, but this is really not a topic of study in VCE economics. We are just looking at the basic model of what should happen in theory with markets. So this is the compromise we choose to make. And indeed, I think as evidence have shown that the market economy tends to perform better than the centrally planned economy. So maybe that's the best option we have currently. So how does market allocate resources? So we have, we will touch on this later. So this is the demand curve, this is the supply curve. And if we look at it, this is price, this is quantity. For this part of the demand curve, we can see that those consumers want to pay a very high price for this particular product. So they will get access to this particular type of goods or services. Whereas for consumers in this part of the demand curve, they are only willing to pay a very low price. And consequently, they are unable to access or consume this type of goods or services. So this is essentially how markets work in a very simple diagram. And what I have just talked about before is called the price mechanism. And of course, there are factors that can shift the demand or change the demand of this product for a particular price. And there are also supply factors that can change the level of supply for a particular price. Some of the things that maybe we are familiar with, interest rates. So we know that in the past few years, the Reserve Bank of Australia and many other central banks have increased interest rate dramatically. And this have significantly reduced the demand for certain type of goods or services. And then that's the reason why the economy is growing very slowly, because the interest rate is so high. So this can change demand as well as supply, because businesses also are affected by by interest rates when making investment decisions. And sometimes, although we have just discussed before that market is very efficient at allocating scarce resources, but sometimes market can also fail. So this is called market failure. There are some types of market failure. I think the most famous one, and the one you will be studying in economics unit 3-4, is called externality. A very fancy name, but the main idea is so for example, tobacco product. So if you smoke tobacco, not only this cause health damage to you, but also pollute the environment and cause health damages to people around you as well. So this is an example of negative externality. So the consumption of tobacco passes a cost to third party who is not involved in this transaction. We also have a positive externality. So vaccines is one particular example. So if you take some vaccine, then you won't be infected by a particular disease, and the people around you won't be affected by you as well. So this conveys a positive externality. And because of this, because you convey a benefit to third party in this decision to get vaccine, and from societal's perspective, it is underproduced. So as a society, we should need more vaccine to reach the socially optimal level. And if we have a free market, it is simply not possible to achieve this socially optimal outcome. So that's when government is important. With government, we can correct this externality. So in the case of tobacco, we can increase tax to discourage consumption. In the case of vaccine, we know that usually vaccines are free, so you don't even need to pay anything to be vaccinated. So that's the role of government in correcting market failures to result in a socially optimal level of consumption in the economy. Obviously, government is not perfect. So a closely related topic is called government failure. So government can also fail to deliver the socially optimal outcome. One very surprising government failure perhaps is the minimum wage. As an employee, you think this is perfect. Why is minimum wage bad? Because it distorts the market mechanism. Maybe in theory, the equilibrium wage in the labor market is perhaps $15 per hour. And if you legislate minimum wage to be $24 per hour, then this will cause an increase in supply of labor because it becomes more attractive to work, but also simultaneously a decrease in demand from employers because it is more expensive to hire people. So maybe employers will make you work harder. And because of this, minimum wage creates unemployment. So for those who are employed, then this is good news. But for those who are unemployed, maybe without the minimum wage, they can be employed. So they are worse off. So I guess this leads to another finding about government policy is that there is always a winner and a loser. And whether you support this policy or not depends on if you are a winner or if you are a loser in this particular case. So this is, I think, the most content in area of study 1. So now let's move on to area of study 2. So this is macroeconomics. So the big economy that affects every one of us. So all the markets imaginable combined together forms the national economy. And this collectively is called macroeconomics. So instead of demand, we have aggregate demand. So all the demand added together. Instead of supply, we have aggregate supply. All the supplies added together. And instead of price, quantities we also have different names. So, okay, maybe it's just different names. This is not entirely accurate, but at this stage, maybe you can help you to better understand the topics. So we have things like interest rates, unemployment rate. We have GDP growth rate, so on and so forth. So that's the macroeconomic indicators. So if you go to ABS, Australian Bureau of Statistics, they usually publish macroeconomic indicators. Also, another useful website is the Reserve Bank of Australia. I think each month they publish a chart showing the economic growth of major economies, the share market indices of different economies, also things related to trade and external economy and GDP and inflation, unemployment. So very useful website. Another key thing that examiners are looking for is your understanding of current economic environment. So it's better to get familiar with those indicators at an early stage. So when the exam comes, you can be very prepared in answering all the difficult questions. So we will learn about different. Okay. Also, I forgot to mention, of course, the very important inflation rate. So we will look at inflation rate and different ways to measure inflation rate. So this is perhaps very surprising. There are actually many different ways to measure inflation rate. So when the headline says inflation have decreased, be very careful. Maybe they are just using a different indicator, and the price is not necessarily decreasing as we experienced it. And also we have different measurement of unemployment rate. So this is actually very confusing. They have so many terminologies, but we will cover this in detail in further subsequent videos. Also, I think you will be introduced to macroeconomic goals. So this is what government tries to achieve. So there are 3 goals. So the first goal, low inflation. So this is primarily to do with the Reserve Bank of Australia. The second, full employment. The third is sustainable economic growth. So those are primarily the government's responsibility. And low inflation is, so there are actually connections between them. Low inflation is connected with the inflation rate. Full employment connected to the unemployment rate. Sustainable economic growth is connected to the GDP growth rate. So you will learn this in great detail in area of study 2. And this is super important in unit 4 as well. Because when learning about budgetary policy, monetary policy, you should always have the macroeconomic goals in your mind. Because this is the guiding principle of government for RBA. And what they do, hopefully, is designed to achieve those 3 goals. So that's macroeconomics. Area of study 3 is international trade. So this topic, I think, historically has been the most difficult topic for students to understand, and because most of the topics are new. So you will learn about things like terms of trade. So this is basically a price index of export price and import price. And students find this very confusing. Also, you have balance of payments. Essentially, accounting system. Because you have so many goods and services flow through the border, you need some accounting system to know how much is going out, how much money is going out, how much money is coming in. So that's balance of payment. Also, trade weighted index. So this is also a price of your currency. So maybe we have those currency pairs, Australian dollar versus US dollar, Australian dollar versus Japanese yen, so on and so forth. So we want to have this aggregate idea of whether Australian dollar is going up or going down. So we use trade weighted index. It's kind of like inflation rate. So maybe the price of petrol is going down, but the price of food is going up. So we want a general idea of what the aggregate price level of the economy is. So we use inflation rate. Same idea as trade weighted index. Also, you will touch on some of the points like international competitiveness and why Australia have a current account surplus but capital and financial account deficit. So this will be explored in area of study 3. So this is the whole thing for unit 3. And then we move on to unit 4. So there is actually a lot to cover in VCE Economics. So it's broken down into 2 parts. So the first one is AD policies, aggregate demand policies. So this is further separated into 2 parts: budgetary policy, monetary policy. For budgetary policy, we look at budget surplus, maybe deficit, government debt, and specific budget initiatives. So maybe I think in this year we have a $300 electricity subsidy. So that's a specific budget initiative for this year. And each year is different. You are allowed to use, I think, initiatives from the last 2 budgets. But I think it's recommended to use current budget initiatives because it is more relevant to the current economic circumstance. So also we have automatic. So this is discretionary stabilizers. Many fancy names. We also have automatic stabilizers. So why do we call them stabilizers? Because the goal of monetary policy is to make the economy stable. So we have sustainable growth, not too fast, not too slow. So that's why we call them stabilizers. So discretionary easier to understand. So what you are doing on purpose, such as the electricity subsidy, is done on purpose to alleviate cost of living crisis. And we will look at this actually in further videos. This may actually cause increase in inflation rate in subsequent period. So may not actually be a good economic policy. More on this later. So automatic stabilizers are the things like income tax and unemployment benefits. So they go up and down automatically. So when economy is good, people earning more money, more people are employed, more income tax collection, less unemployment benefit, automatically. Conversely, when economy is bad, we have lower income tax collection, more outlays due to higher unemployment claims automatically. So as you can see, this happens automatically. So that's why it's called automatic stabilizers. And the next part is monetary policy. Monetary policy is all about interest rate. Back in the day, and the central bank usually control the very short term interest rate only, such as the overnight bank loan. So the duration of this loan is only one night. So very short term indeed. And the theory is, if you lower or raise the short term interest rate, the longer term interest rate should also move together. So it serves as an anchor point for the whole duration, the whole different duration of interest rates. But the problem is, after COVID, many central banks have already lowered their interest rate, the overnight interest rate, to 0%, sometimes even negative. So there's no room to move. And then that's when they have pursued the unconventional. So this is conventional. So also have unconventional monetary policy. So this is designed for influence, maybe directly at longer term interest rate. A very famous example is Bank of Japan targeting the interest rate on 10-year government bond instead of overnight government bank loans. And I think during COVID, the Reserve Bank of Australia have targeted the 3-year government bond at 0.25%. So they will do whatever necessary to keep the interest rate on the 3-year government bond at 0.25% in order to stimulate the economy. And I think it worked, perhaps worked too well, to the extent we see the increase in house price during COVID. And also people spend huge amount of money to buy cars, buy furniture, and then we have a shortage of everything during 2022. And we will also learn about how does interest rate affects household decisions. Sometimes it's through psychological channels. So if the house price goes up, and if you are a homeowner, you feel richer, so you spend more money. Sometimes it's actually more money in your pocket. So if the mortgage rate goes down, then the repayment decreases, so you have more money in your bank account, essentially. So different ways to stimulate the economy using interest rate. We will also cover this in great detail in subsequent videos. And then the last area of study, AS policies, aggregate supply policies. So aggregate demand policy have one problem. It only works in short term. So if you want to print money or whatever, maybe can stimulate the economy in short term. But if you don't have enough supply to meet this demand, then eventually what you will have is a very high rate of inflation for a sustained period of time. And there is actually no impact of your aggregate demand policies on economic growth, because you can only supply so much products, and then you have this huge amount of money in the economy. You still have that many supply, but then because there are a lot of money chasing relatively few amount of goods, you have inflation. So to get a sustained level of economic growth, we need to increase the aggregate supply of the economy. So this is when AS policies become important. It increases ability to produce. And this is what guarantees a sustainable level of economic growth. So there are many different types of AS policies. Education, research and development, investment in infrastructures, such as the metro tunnel. We have immigration policies. We could have welfare tax reforms. Maybe decrease the tax rate so people are willing to work harder. In this way, increase the ability for the economy to supply and make Australia more competitive globally. So this is essentially the AS policies. I think in the exam, they don't really ask questions about AS policies that much. And also because it is the last area of study. So I think most schools only spend a very little time on this topic. But I think you still need to have a good knowledge of AS policies in case that some big questions in the exam is about AS policies. And it is also a super important policies because without increase in the ability to produce, the economy cannot sustain high level of economic growth in the long term. What you will have is perhaps declining rate of economic growth and high inflation. So this is called stagflation. Okay, so this is the overview of the course. Hope you find this interesting, and see you in future videos.